Hey guys, welcome back. In this video, I'm going to give a brief overview on the end of day reports, which are available on my Patreon. Now, at the end of each trading day, I run several scripts to gather and collect data. And at the very end of the day, I run an Rmarkdown, which summarizes the data, or at least most of it. This HTML is generated from the Rmarkdown, which I'm not going to go over because that script just reads in the files that I have generated for that day. But it is available on Patreon, and it constantly changes depending what I want to see summarized. Now, we start off by adding the fear and greed index, which I have a tutorial here on YouTube on how to calculate it and print out a chart. So we see the latest reading according to our calculation and the previous day's reading along with the gauge for the current day and the change in points compared to the previous day. I also want to see a printout of the economic calendar for the current week, and I'm only adding the reports that are expected to be high volatility. Now, I try to split up my data between options, futures, and stocks, and the following section is just for the options. Now, here I have some formulas along with the printout for about 5,900 different underlying symbols. So at the end of the day, it's going to calculate the total volume for calls, the total volume for puts, the put to call ratio for all the symbols, the total open interest for calls and puts, the open interest put to call ratio. I'm also interested in seeing the option volume for out of the money options. We also add the breadth for call advancers and put advancers, the dollar volumes between calls and puts, and finally the dollar volume for the open interest. Now we also get some charts, and the first one is between the SPY versus the dollar open interest. And as we saw above, the open interest for the calls is significantly higher than the open interest for the puts. So these lines provide the historical values for the open interest for all the options in my data set. And I just want to track the behavior between the SPY and the open interest to see if I can spot any noticeable events. Now, similarly, we have the SPY versus the put to call ratio. Now, the black line is the historical put to call ratio for all the options in my data set. So again, I'm just tracking to see if I could spot any noticeable changes. And these charts are interactive, so we could take a look at all the data, which is the current view, or different periods in our data set. So if we click on zoom for 1 month, we now see the put to call ratio from May 5th to June 5th. We also track the SPY versus the dollar option volume. So the bars, of course, are the SPY. The black line is the call option volume versus the green line, which is the put option volume. I also plot the SPY versus the call to put advancers to check to see if we can spot any noticeable changes in direction. Now, continuing on with the options, we're going to return tables that plot the largest positions by volume for both calls and puts. And I'm going to exclude these underlying symbols since these are heavily traded. So for this trading day on the call side, it looks like Monster had the number one spot at the 70 strike, having an expiration of June 21st. There's 16 days left to expiry. The volume was close to 80,000 contracts. This was our open interest. Our volume to open interest was pretty low, which is volume divided by open interest. The mid price for the option was about 3 cents, and this is where the stock closed that day. So I returned the top 50 contracts, and we could always view all by changing this to 100 or 50, and we could see all of these options. You can export this table by clicking Excel or CSV. You could also return the table in PDF format or print. So similar to the table above, we have our largest put positions by volume, and again, taking the number one spot is Monster with the 70 strike. We have the same expiration as we did for the calls. Now, the information can be interpreted in different ways, but I just want to keep track of typically the top 10 and just kind of track them till expiration and just kind of learn what happens to these positions until expiration. Now, continuing on with our options report, we also list the largest call and put positions by volume to open interest. Now, these are typically flagged as unusual options activity since the option volume is significantly higher than the open interest. So if you divide volume by open interest, we get this ratio, and these get sorted from highest to lowest. So again, just keeping an eye out on what happens to these contracts and the activity for the underlying symbol between now and expiration. So these are all calls, and we also plot the ones for the puts. Now, sometimes the volume to open interest ratio is fairly high, but the mid price for the option is relatively low. So keeping that in mind, I want to plot options that have a high dollar volume to put dollar volume. If we take a look at our first row, we see that the volume on the call side was 1,200 versus one contract for the put side. We also see that the open interest on the call side is significantly higher than the put side. If we multiply the call volume times the option price, we get the call dollar volume versus the put dollar volume. The same goes for the open interest. Now it looks like the stock is leaning more towards the bullish side, so I'll keep an eye out on this stock or ETF. We also have the in-the-money call volume, the out-of-the-money call volume versus the puts, the in-the-money versus the out-of-money dollar volume for both the calls and the puts, and also for the open interest. We return the stock symbol and the percentage of total volume and open interest for this particular underlying versus the whole market. Typically, these will be close to zero. And if there's a value, for example, for SBLK, the total volume traded on SBLK compared to the total market just made up a fraction of a percent. And lastly, we have the call and put ratios, which I have listed the formulas above. And we have the same thing for the put side. So all of these displayed higher put dollar volume compared to the call side. And we also generate a table for the top 100 underlyings with the greatest option volume. Now, typically these don't change. And what I typically look at is the percentage. So the percentage for total volume, as expected, we see that the SPY made up approximately 17% of the total options volume for that day. And from time to time, we see that we get stocks like GME or AMC that make the list, and we list useful stats for each of these stocks or ETFs. I also track the changes in open interest, and this is for each specific option in my dataset. And this is the summary for all the columns in this table. Now for each of the option contracts, I'm going to return a table with the changes in open interest. And again, these are sorted from highest to lowest. For the very first row, we have Monster, and it looks like since May 29th, we see nothing but increments for this particular strike and expiration. The starting price for the option on May 29th was 3 cents. The last price was also 3 cents. So there was no dollar change or percentage change. The underlying symbol is Monster. The strike is 70. We return the expiration, the flag, which is on the call side, the approximate volume weighted average price on the volume versus the open interest. Since these are VWAPs, we can kind of monitor and see what the last price is compared to the VWAP, which will let us know if the trader is up or down on their position. So since these are both 3, there's no net change to the VWAP. If the value is positive, such as the second row, we see that the trader is up if they bought this option contract. So for example, on the second row, we see that the last price was 246. The VWAP was approximately 236. So the trader gained 10 cents. If he bought this option contract, he's up $1.15. If we're taking a look at the VWAP on the open interest, we also see the options worth, the approximate P&L if they bought the contract, and the changes between the P&L and the VWAP price, and the approximate net change if these shares are exercised, if they decided to exercise their options. So again, you can take a look at this table and the column definitions above to get a more detailed explanation. But continuing on, we generate the same table as above, but this is for the put side. We now have a chunk for our futures. So I list the symbol, their name, and their types. And I want to keep track of the year-to-date performance. So we download that data from Yahoo Finance, and we track the best performing futures year to date versus the worst performing futures year to date. And given the data, we see the 1-day return for the futures group. So on this particular day, it looks like the best performing category was energy versus the worst being agriculture. And we can also see the percentage change on a daily, weekly, monthly, quarterly, and year-to-date basis. So these can be sorted if you just click on a particular column, depending on what you want to see. I'm also adding the gamma exposure profiles for a couple of ETFs and indices. So we see the gamma exposure profile for the SPY, and this is for all the option chains versus the next day expiry. And again, we see the flip price and the current price. So we have SPY, we have the SPX, and we have the Qs. Now our next section is for stocks, and I like to see the top 10 stocks year to date, the top 10 stocks for 1 quarter, for 1 month, for 1 week, and for 1 day. And given the data that we have, we're going to plot the breadth for this particular day. So it looks like we have 66% that were advancers versus 34% being decliners. And you can kind of hover over the graph. It will return the stock along with their performance for 1 day. We're also going to take a look and see at the stocks that are trading at 52-week highs or lows or within 1%. So these are all the stocks that made it to the list. So we see the 52-week range along with the last traded price. Same thing for the 52-week lows. We're also going to return an overview on market cap performance. So from mega cap to small cap, we list the number of stocks within each category, their market caps, their approximate dividend yield, price to earnings ratio, along with the forward PE, the PEG ratio, the short float, and their change for that given day, along with the volume traded. We get market cap performance. So we get the performance for for each of these time periods, along with their valuations. We have year-to-date index performance. So we track these ETFs and we can see their performance on a daily, weekly, monthly, quarterly, and year-to-date basis. We also get the sector performance, and here I have listed all 11 ETFs pertaining to different sectors, and I want to take a look at the best sectors and the worst sectors year-to-date with their respective charts, along with the table indicating their returns on a daily, weekly, monthly, quarterly, and year-to-date basis. We're also able to scrape the sector overview from FinViz. So similar to the market cap that we saw earlier, we get their fundamentals, their performance, and their valuation. Now it's also important for me to take a look at the asset class performance. So here we have gathered a couple of groups. We have bond or fixed income, given these respective ETFs. We also have commodities, currency, and equities. And finally, we have real estate. And we're just plotting the best asset classes along with the worst. We have year-to-date standings on the asset classes. Finally, we have a table expressing their percentages on a daily, weekly, monthly, quarterly, and year-to-date basis. Similar to the asset classes, we want to track developed and emerging markets and see which are outperforming. And you could also view their returns on a daily, weekly, monthly, quarterly, and year-to-date basis. We also get a country overview provided by FinViz, where they take a basket of stocks for each of these countries, and we can view some stats such as performance and valuation. And given the performance table, we can plot their performance on a world map. So we could zoom in here. So the larger the circle, the greater the return. Now we also have intraday seasonality if you're day trading or if you want to just see what hour of the day seems better to trade. So intraday we have these time of day patterns that I have plotted year to date. Each of these bars represent a different time frame, and if you hover over this first bar, then between the first hour there's a 53% chance of an upside probability, having a range of about 6 cents for the SPY. The highest was at the third hour with 9 cents and upside probability of 52.6%. Now, the larger the sample, the greater the chance that these will fall down to 50-50. But if we take a look at the last 20 trading days, we begin to see noticeable patterns. So in the last 20 trading days, SPY has rallied at the very last hour, and out of the 20-day sample, 76% indicated a rally in the last hour. We see that the average SPY points was around 50 cents. And for daily correlation test, here I provided a sample and wanted to test the current SPY return versus any other time period in its history. So the black line represents the current SPY return, and the blue line represents the period with the highest correlation. And right now there's a 92% correlation. And as we see, the current return highly correlates with the time period between 1957 and 1962. And I have plotted the 3-year outlook. Now, this doesn't mean that SPY is going to decline, but if the correlation seems to hold, then it could follow. So I'm keeping an eye out for that. And we can also take a look at the monthly seasonality. So currently for the month of June, there's a 60% up chance for the SPY. Historically for the month of June, we've had a couple of large losses in the SPY. There's slightly a higher chance that we close up for the month, and you can see the stats up in this table here. Now we also want to take a look at the same thing but on a quarterly basis. So here for the quarter ending in June, we've had a 72% probability that SPY rose for this quarter. Now if we take a look at market timing, I created a tutorial and it's up in YouTube somewhere where I tried to pinpoint the market timing for both extreme fear and extreme greed. For extreme fear, I want to see the VIX trading above 17 and the percentage to the 250 SMA will be over -2%, while extreme greed, I want to see the VIX being less than 15 and the percentage to the SMA greater than 10%. And here we see the strategy performance relative to the Qs, and it'll print out the tables indicating the long instances and the short instances. And we haven't had a long signal in a while. So if we click on the last entry, the last signal occurred on March 10th, 2023. And we can see where the VIX started, when the VIX ended, the starting and ending price for the Qs, the Qs return, the portfolio return based off of a basket of ETFs, and the holding period in years. Similarly, we have short instances. So if we take a look at the last table, it's been telling us to short pretty much every month all this year. So of course, the Q's performance is not that great. Now we also have the market breadth using the 200 EMA. So the following stocks are trading above their 200 EMA. And we currently have 58 entries. And if we plot that against the Qs, what was noticeable for me was that whenever it crosses this lower line was typically a good time to buy, but we haven't seen that in a while, so I'm just keeping an eye out for when we cross that lower band. I also want to take a look at the yield curve and the rates. So here we see the 10-year minus the 3-month, and I really thought we were going to go positive here during the time period, but it seems that we have gone back down. And for the yield curve, we plot different time periods. Typically it'll be the first day of the year and then the last day of each month year to date, and we see that there's relatively no change for the short rates, but there is a noticeable difference for these longer term rates, and we're currently sitting in the middle of the range. And lastly, we want to take a look at the earnings for the constituents of the SPX. So we list a table with each of the constituents, their weight on the SPX, the number of shares held, their EPS versus the EPS forecast. If they have released their earnings, you'll see a number for the surprise, the actual release date, the number of EPS estimates, the company's fiscal quarter ending date, their market cap, the stock price, their market value, and the estimated index earnings per share contribution. So here we plot the percentage surprise for the top 25 stocks by index weight, and we see that the majority luckily have been beating so far. The only stock that's had a negative earnings surprise was ExxonMobil. So these 25 stocks contribute approximately 47% of the index weight, and therefore I want to track how well they're performing. Well, with that, guys, this concludes the video. As I mentioned, these reports are available on my Patreon, where I upload these for each trading day. So this is not investment advice, rather it should be used to get an overall feel of the market. I hope this was useful information. Please consider subscribing to the channel if you haven't done so already. Thank you so much for watching, and I'll see you guys in the next video.